Hi, and welcome to The Good, The Bad, and The Bitcoin. My name is Dirk, and I've been a trader and investor for 25 years. If you're watching this video, there's actually a good chance that you maybe searched on YouTube for something like how to find a simple trading strategies or trading strategies for beginners. This is exactly what we want to talk about today. I want to share you one of my simplest trading strategies, but just because it's simple doesn't mean it doesn't really work. On the contrary, I think it's a great trading strategy actually for beginners because the setup is very easy, the charts are very easy to read, and it's very clear when to enter a trade and when not to enter a trade. Now, before we start, one small request, please leave me a like and subscribe to the channel, and more importantly, even leave me a comment underneath the video what your experiences with trading, especially day trading, have been so far. Alright, as you can see, I already logged into my TradingView account and opened a chart here. For demonstration purposes, I'm going to work today with the so-called S&P 500, which is traded at the New York Stock Exchange, largest stock index in the world, because we, especially if we want to trade on the lower time frames, we really want to concentrate on instruments that have a lot of volatility, first of all, and especially also a lot of liquidity. So our trades get executed for fair prices and not prices that we actually don't see on our screen. If you want to follow me along here, you can search here for SPX 500 USD and then apply this to your chart. I'm working with a 5-minute time frame, but the strategy you can actually use on any time frame. What we want to do now is we want to add some indicators, and we are going to start here by clicking on indicator and searching for the so-called relative strength index. Very old technical indicator, has been used for many years. However, it's one of my favorite indicators, but not used in the classic way, but in a slightly modified way, and this is what I want to show you now. So I'm going to add this down here. I want to modify the settings a bit to make it more appealing. So let me do that quickly. Okay, this is just visual adjustments. You don't need to do this. I think it just makes it easier to see. Okay, the second thing we want to do is we want to go here again to the settings of the RSI into inputs. We want to make sure that our RSI length is 14. This should be the standard that is applied, that the source is closed. And we want to change here the so-called MA settings, which stands for moving average, to a WMA, which stands for weighted moving average. The length should be 14 here as well. We want to change this to 6. The standard deviation we leave at 2. Click on apply again. You could of course change here also the thickness of the line of the moving average as well, just to make it a little bit more appealing to the eye. Now we want to add another indicator, and this is going to be a so-called Exponential Moving Average, or short EMA. I'm going to add this, and standard is now that TradingView will add this to the S&P 500 chart. However, we want the Exponential Moving Average to be added to our RSI, and in order to do this, we need to go here to the settings of our EMA, go to this dot menu, and then go to this move to existing pane below. You can see it removed it here and it added it to the RSI. Then we want to go to the settings here as well, and then I want to change the length to 3, and this is important. The source needs to be RSI RSI. Here we go, click on OK. What you see now is here the RSI and its 2 moving averages. Last indicator we want to add is again a so-called EMA, Exponential Moving Average. This time, however, we want it directly on our S&P 500 chart, and we just need to change a little bit the settings. I'm going to change the length here from 9 to 100. Good, this is all we need already for the setup. Now, let's talk about the trading strategy itself. What we are looking for are actually 2 things first. We want to see and this is the classic RSI interpretation. We want to see the RSI being either above 70 in order to look for so-called short signals or sell signals, or we want it to be below 30 in order to look for buy signals or long signals. The second thing we want to look for is we want to see that the RSI crosses its 2 moving average. So like for example in this case, we had the RSI above 70. We saw that the RSI crossed its moving averages. So what we can actually see here, however, is that this short signal was not that great, you know, it moved a little bit finally after a while into our direction, into the direction of the signal, but really just maybe a couple of points you could have scalped out of the market, if at all. Probably a trade where you would have been stopped out at break even, or maybe with a slight loss. So we want to modify this trading strategy by 2 more things. The first thing is we want to see that the price of the asset we are trading has moved away by quite a margin from its exponential moving average. This actually for this trade was also the case. You can see the price is far above its moving average. So this is the first thing we want to check for. The second thing we want to check for is also once this RSI signal triggers, I'd call this the RSI hook, we want to see that the moving averages plus the RSI are still above 70 for the short signal. And you can see this was not the case here. When the signal triggered, the RSI actually was under 70 at around 69. So in this case, I would not have traded this signal actually. Let's have a look at a case that is more clear signal wise. I go back here a little while, and this is a trade actually that I took myself. Again, we have the RSI under 30 in this case, went all the way almost down to 0. It crossed its moving averages with a hook. RSI and the moving averages were still underneath 30. The price of the S&P 500 was quite away from its exponential moving average. So this is a long trade we could take, and you can see in this case we would have entered the market here. If we would have held on to this trade, would have moved potentially up to 30 points, but we could have taken almost 30 points in profit. Now what I like to do in order to manage a trade like this, because the thing I do not know obviously is how far is the market going to rise. What you can do is here you can either, for example, take some profit once the market returns to its exponential moving average, which in this case was just a couple of minutes after entering the trade, because what we see very often here is that the price likes to linger around this exponential moving average. So you could do 2 things. You could, for example, take a little bit of profit here, or move your stop loss to break even. In this case, we would have been stopped out at break even, but you know, the first rule of becoming a successful trader is to avoid losses, obviously. So being stopped out at break even is not a bad thing. This is still considered a successful trade. Or you could take your whole profit there, or you could take half of your profit, move the other one to break even. Whatever whatever you want to do, you really need to apply your money management, your risk management philosophy here. Let's have a look at maybe another example. In this case, a short trade. So again, here we see the RSI was above 70, crossed its moving average to the downside, but stayed above 70. And actually in this case, we had this happening 2 times. So it was happening another time here really at the top. And this is, by the way, something I call signal clustering. So you will see this quite often before the market goes more or less sharply into the opposite direction, tops out or bottoms out, but you'll have clusters of those signals. In this case also, again, you know, it's good to be patient. Both trades absolutely went into the right direction, and here again you could have taken a profit already at the exponential moving average. The tactic here of waiting after the exponential moving average is hit and then adjusting the stop loss to break even worked out very well. So potentially we could have rode this trade all the way down here to 4,575. So that's another 20 points that you could have earned with this trade. So this is the thing I like about this trading strategy. It's quite simple. The trade setups are very easy to spot, especially if you set up TradingView in a way that it's more appealing to the eye. You can apply those to all time frames. However, there's like one thing you need to be aware of. This trading strategy works well, as you've just seen. The entry signals are very, very clear. It's also easy to apply your own money management and risk management to it. However, this is not a holy grail. So this trading strategy will not work when you have very, very trending markets, like for example, for the past days that we saw in Bitcoin. What do I mean by trending markets? Trending assets are assets that once they start running either to the upside or downside, they hardly stop doing so for a long time into one direction. An example of this is Bitcoin. You can, for example, see here, this is a daily chart, that by definition of a system, you would have had an entry here and an entry here. This one would not have been an entry, actually, no, this one would not have been an entry, but you can see how the market still moves to the upside. This is by the nature of Bitcoin, for example, and the cycles that Bitcoin goes through. Once it's in a bull cycle, it tends to only move to the upside. On the contrary, then when it enters a bear market, like we had in 2022, it only moves to the downside. You want to be extremely careful with this type of system here, because it won't really work. You can see you would have been entering the market here at 33,000 and 35,000 to the downside. So it doesn't work. For me, this trading system works quite well, especially on forex pairs, on something like gold, on stock indices like the S&P 500, for example, or the German DAX. However, be aware that like any trading system out there, this is not the holy grail. This is nothing where you can just wait for an entry and then fire and forget and you'll earn $1 million within 2 weeks. Every trading system has its strengths and its weaknesses. So it's important that you also have your plan in place, that when are you going to exit the trade? When are you going to cut your losses? This is as important as entering the trade, that you have your risk management in place. However, I think this type of system can maybe help you to get started if you are lost in the world of, thousands and thousands of indicators, of people that are trying to tell you or to sell you the indicators. This is something that worked in the beginning for me very well, as something that I, up to this day, whenever I, for example, day trade, I still like to use. I hope it helps you as well, and if you liked what you were seeing here, please leave me a like, subscribe to the channel. I publish new videos every week. See you again very soon. Until then, remember to always use a stop loss, and happy investing.